Let's take a look at SOFI's stock. The most important thing I want to show you is the options volume. As we can see, there's a massive wall here. If we check the open interest, we see another huge wall at $30. This means that $30 is a significant barrier. However, if we manage to break through it, the potential for SOFI's stock to rise is actually quite substantial. The question is, what can help us overcome this massive wall? Perhaps it will be the upcoming earnings report on October 28th. This report will soon reveal whether we can break through or not. If we do, my friends, there will be virtually no obstacles left. But let's take it step by step. Today, we'll analyze SOFI's stock and see what's happening. We'll definitely look at the volatility smile, as there's a lot to unpack. I'll also show you my favorite indicator, the probability distribution profile. We'll explore the likelihood of the stock price being in various ranges. Additionally, I'll show you implied volatility and historical volatility. We'll examine the options chains in detail, just as I always do on my channel. Let's start by looking at volatility. First off, we can see that volatility is starting to rise. It's currently reached 100%. For some strikes, it's at 75%, but that's still quite high. Naturally, this is partly due to the upcoming earnings report. We can see that the stock is consolidating, stuck in the $25 to $30 range. Yet volatility continues to climb. This is primarily related to the earnings report. Let's take a look at historical and implied volatility. We can see that implied volatility tends to increase around earnings reports, followed by a decline. We'll definitely keep an eye on that. Now, the most important thing I want to show you is the options volume, both calls and open interest. Let's start by looking at the call options. We can see that the main volume is concentrated in call options, as there's not much happening with puts, which is quite strange. Many investors and traders are betting on a rise, which could have negative consequences if the earnings report doesn't meet expectations. The reaction could be quite severe, potentially dropping to $20. But let's take a closer look. We see that there's a huge volume of call options at $30, meaning someone is buying these options and consequently, someone is selling them. I'd like to remind you that gamma compression could occur here. What do I mean by that? Regular investors have bought call options, but someone has sold them. Typically, funds and market makers are the ones selling. They don't profit from the options themselves. They make money from commissions and spreads. Their earnings strategy is different. Therefore, they need to hedge the call options they've sold. How do they do that? They implement a delta neutral strategy. For each call option sold, they buy shares. So if SOFI's stock starts to rise, the call option could incur losses, but the shares would offset those losses. They don't buy 100 shares per option. They buy as many shares as indicated by the delta. For example, the delta for the $29 call option with an expiration date of November 21st. So to hedge this option, they need to buy 50 shares. But this isn't just simple hedging, it's dynamic delta hedging. If the stock starts to rise, the delta will also increase, and they'll need to keep buying more shares of SOFI as the delta rises. This process can drive the stock price up, resulting in what's known as a gamma spike, because gamma increases faster than delta. All right, my friends, you should focus more on learning about options. I recommend you get a good grasp of this. In short, if we break through and move above $30, the reaction could be immediate, and we could see a sharp jump, perhaps by 20 to 30%, or even up to 50%. Yes, I can see that happening. But we need a catalyst for that. Whether the earnings report will serve as that catalyst is uncertain. If anyone tells you they know for sure, they're mistaken. Everything could go the other way. Again, we have significant options walls at $28 and $28.50. As for put options, there isn't much support here. Put options are following the same trend, acting as a support level. The largest support for puts is actually at $22. Friends, if we drop to $22 and then bounce back, please don't say I didn't warn you. I'm showing you clear targets here. These are not just random waves or moving averages. Yes, moving averages are good, but I look deeper than just basic moving averages. Next, let's look at the volatility smile, also known as the volatility curve. What's happening here? As we can see, volatility is skewed towards put options. This is a normal situation because investors primarily hedge, and naturally, put options should be more expensive than call options. Volatility is higher, which means Vega is also higher. Vega is what drives volatility. So the higher the volatility, the higher the vega, and thus the more expensive the options become. This situation is generally healthy for the stock. Now, let's look at my favorite tool, the probability distribution profile. This tool helps explain the current relationship between stock prices and option prices. Typically, stock prices and option prices are closely aligned. Therefore, we can see what the options market is pricing in. Essentially, this is a direct prediction from the options market. Friends, if you plan to argue with the market, that's not a good idea because sooner or later, you'll lose. You need to move with the market and then you'll be a winner. As we see, the options market is pricing in a price around $26, 7 by the end of November, indicating a slight decline. Let's check December, and here the price drops to $25.27. The situation isn't looking great because the options market is pointing downwards. But again, this is also tied to the call options and that wall. If we manage to break through it, everything will realign. Let's quickly make a small assumption and see what volatility might look like at 40% if the stock rises to $40. Volatility could possibly drop to 55%. This is where we can play, my friends. That's my secret plan. We'll actually play the volatility. Well, I'll share more about that later. Now let's look at the overall analysis of the stock. I remember doing a review when it was at $6 or $7. Now it has surpassed its historical high. The company is growing and has become profitable. When I first reviewed it, it was still losing money. SOFI has significant potential, but we also need to keep an eye on the overall market. In my opinion, the market is currently overheated, and a correction could happen at any moment. Next year, no one knows when that might occur. Therefore, SOFI stock could also see a correction. But if you're an investor, that could be a good thing, as you'll be able to buy a solid stock at a lower price. Now let's devise some interesting strategies. As you know, I don't like to just buy or sell stocks outright. I prefer to create interesting strategies, for example, using options. We can set a date for the end of the year and also predict that volatility will drop. Remember, we forecasted that volatility would fall to 55%. We can set that up and it will provide us with interesting strategies. Let's see what strategies it suggests. Essentially, artificial intelligence will propose various strategies for us. We see that there are strategies with a 100% probability of profit, which is quite amusing and interesting. Let's see what they offer us. Oh, they're suggesting a really advanced strategy. They propose selling options with a strike of $28, both call and put options, with an expiration date of December 19th, and buying call and put options with a strike of $28 that expire on January 16th. This is quite a complex strategy. It involves different expiration dates and is designed for management. You need to actively manage this strategy. However, the potential profit could be very substantial, especially since it's projected with nearly 100% probability. So what's our plan for today? Let's keep an eye on the $30 level. And again, if the stock rises slightly above this level, my friends, don't celebrate too soon because it could be pulled back down. We need the stock to really take off, to catapult upwards, to trigger a cascade growth effect. If we break through, I can see us rising straight to $40, $45, or even $50. We'll need to monitor things until the funds start selling off. I also recommend keeping an eye on the news in our Telegram channel. We'll post urgent updates there if anything happens. I won't dwell on that now. By the way, we're also seeing insider selling. Currently, the stock is being sold off. The most important thing I wanted to show you is the Fear and Greed Index specifically calculated for SOFI stock. You know there's a similar index in the crypto market, and this one is tailored for SOFI's volatility and many other instruments. I encourage you to check it out. Signals will pop up there if anything happens, so you'll be in the loop. Lastly, let's keep monitoring things. If anything is unclear, feel free to leave comments, and we'll dig deeper. We'll be watching this earnings report closely, as it could be a key report for the near future. Most likely we'll break out of this consolidation, but we might also stay within it. We just need to keep observing. Good luck to everyone.